Hello, guys. I want to comment real quick on this whole life policy. This is a $50,000 whole life policy, and it would last the duration of your life. And I also added $50,000 for ADB, accidental death benefit, which means in the event that you do die in an accident, bus, train, plane, you would get an additional 50,000. So if it's a natural death, you'll get $50,000. If you die in the result of an accident, it would double to $100,000. And I also added waiver of premium. It's called nursing home waiver of premium. If you're in a qualified nursing home for at least 90 consecutive days, the insurance company will stop charging the annual premium of 1,700, roughly 1,800, so you can keep your coverage without having to pay. You must pay premium during 90 days waiting period, and it costs $25 a year to add this rider. A rider is just basically an additional option that you add to your policy. Accidental death, I already explained that. If the death is caused by accident, your beneficiary gets an extra $50,000 on top of the base death benefit. Cost $100 a year. So accidental death is $100 a year, and the waiver of premium is $25 a year. What else? Example cost, annual premium. Base policy premium, $1,800 a year. Add-on rider, cost optional. Nursing home is waiver of premium is $25. Accidental death, which is ADB, is $100 a year. These type of policies are designed for someone who wants permanent coverage, not term. Basically, they want it for whole life. They don't want it to expire. Wants immediate full payout to loved ones. Wants access to benefits while alive, if seriously ill or in a nursing home. Likes the idea of no premium while long. Okay, somebody that doesn't want to pay any premium while in a long-term care. So if you go into an LTC, long-term care, you no longer have to pay premium. You have to be confined for 90 days. If you guys have any questions, please leave them below. Terminal illness, if you, in the event you develop any terminal illness and the doctor says you have 12 months before you pass, you will get up to $100,000 while you're alive. If you're diagnosed with terminal illness, you can get your death benefit early up to 100% to help you with expenses while you're still alive. Admin fees will be deducted. Give peace of mind during difficult time. So in the event that you become terminally ill, you are able to get the $50,000, and you could do with it as you may. You could pay off a house. You could go party with it, because people always get confused. They think that money's going to have to go somewhere, like where the insurance company is going to have to decide where it's going to go. But no, they hand you the money, and you can do whatever you want to do with it. And also, you get it tax-free. That's really, really important. Nobody else does. If you look at the investment world, there's no such thing as tax-free except for life insurance. I hope this helps, guys. If you have any questions, leave them in a comment below. And this client here, let me pull up the PDF real quick. I'm going to pull up the illustration over here. She lives in North Carolina, non-tobacco user. She's 51 years old, and her coverage is $50,000, and her monthly. She's very healthy, by the way. Her monthly payment is $157. That's a really, really great policy. You have to keep in mind we added $50,000 for ADB, accidental death, and we also added waiver of premium. We added 2 options to that policy, and it does come with terminal illness rider. In the event something happens to you while you're, in the event you become terminal, you're eligible for 100% of the death benefit, which is $50,000. I hope that makes sense, guys. I know it's a lot of information. Also, another thing too, I want to mention over here, it builds cash value. It's guaranteed cash value. So if you look at, if she gets, she's 51 right now. If she wait till she's 66, which is about 15 years, she'll have $11,000 in guaranteed cash value. She have access to that money to use it anytime she wants. She can take that money out and she never have to pay it back. When she takes that money out, by the way, it does get deducted of your face value. What else? Basically, it lowers the death benefit. So say in 15 years she decides to take out that $11,000, that's going to lower. That's going to get deducted from the $50,000. So her death benefit is going to be $39,000 in the event she dies after 15 years. She uses that $11,000. Her heirs or beneficiaries will collect $39,000. Thank you guys for spending time with me, and if you have any questions at all, please leave them in the comment below, and I'll be more than happy to answer them. Have a wonderful day, and Don't forget to leave your comments below. And if you've gotten any value out of this video, please don't forget to share it. Let's help as many people as possible. Have a wonderful day. 330-577-3496 or 910-447-6508. Call or text anytime. Thank you.
Glowing Star Overview. This is a whole life insurance policy, meaning it lasts for your entire life, never expires, and builds cash value over time. Immediate death benefit means your loved ones will receive 100% of the death benefit as soon as you pass, no waiting period. White heavy checkmark. Key features explained. 1. Terminal illness accelerated benefit rider, Form No. A9473R. If you're diagnosed with a terminal illness, you can get your death benefit early, up to 100%, to help with expenses while still alive. Admin fees will be deducted. Gives peace of mind during difficult times. 2. Confined care, nursing home, accelerated benefit rider, Form No. A3156. If you're permanently confined to a skilled nursing facility, you can receive part of your death benefit monthly before death to help cover care costs. 3. Nursing home waiver of premium, Form No. A9984NC. If you're in a qualified nursing home for at least 90 consecutive days, the insurance company will stop charging your annual premium, $1,790.50, so you keep coverage without having to pay. You must pay premiums during the 90-day waiting period. Costs $25.50 per year to add this rider. 4. Accidental death benefit, Form No. A7159. If death is caused by an accident, your beneficiary gets an extra $50,000 on top of the base death benefit. Costs $100 per year. Receipt. Example costs: annual premiums. Base policy premium, $1,790.50/year. Add-on rider costs, optional nursing home waiver, $25.50/year. Accidental death benefit, $100/year. Direct hit. Who this is for: someone who wants permanent coverage, not term. Wants immediate full payout to loved ones. Wants access to benefits while alive if seriously ill or in a nursing home. Likes the idea of no premiums while in long-term care. In life insurance, an ADB rider stands for Accelerated Death Benefit Rider. It's a very useful optional feature, or sometimes automatically included, that allows the policyholder to access a portion of the death benefit while still alive if certain conditions are met. Stethoscope. What is it for? The ADB rider is designed to help in cases of terminal illness, typically with life expectancy of 12 to 24 months, chronic illness or confinement to a nursing home or long-term care facility, depending on the rider version. Money bag. How it works: if the insured is diagnosed with a qualifying condition, they can request an advance on their life insurance death benefit. This money can be used however the person wants. For example, medical bills, home modifications, living expenses, hospice or caregiver support. The remaining balance, if any, goes to the beneficiary when the insured passes. Chart. Decreasing. How much can you get? Typically up to 50% to 100% of the death benefit the insurance company may deduct an administrative fee, interest, or adjust the death benefit based on how much is taken. White heavy checkmark. Example: let's say you have a $100,000 policy. You're diagnosed with a terminal illness and request $50,000 through the ADB rider. You receive the $50,000 now to cover expenses. When you pass away, your beneficiary receives the remaining $50,000, less any fees. Warning: important notes: this is not a loan, it's an early payment of the benefit. Using it reduces the amount your beneficiary will receive. You may need to provide proof from a physician or medical documentation. Brain. Think of it as a way to turn your life insurance into living benefits during the time you need financial help the most.